I'm going to teach you how you can use a volume profile and fair value gaps to develop a very simple and effective trading strategy. And when I say simple, I mean pretty darn simple. I do have a trade example of what I actually took today, but before I jump straight into that, I do want to give you an explanation of briefly what volume profile is and what a fair value gap is. Odds are you probably know what both of them are, so we're not going to go super in depth. A fair value gap is going to require 3 candles like this. For instance, you have 1, 2, 3, 1, 2, 3. It's going to be made specifically by the middle candle, and you're going to draw it from the top wick of the first candle, which in this case there's none, and the bottom wick of the third candle. So that is considered a fair value gap. Now, if you're looking at one to the downside, it's the same concept. And we can even use this example here, which is somewhat what I used. I don't put a lot of emphasis on fair value gaps, if I'm being honest. But you have your first candle here. You have your middle candle right there, and then your third candle, and you're going to draw it from the bottom of that wick and the top of this wick. Fair value gap. Boom. Pretty easy. Now, next is volume profile. There is a lot that can go into volume profile, but like I said, I'm going to keep this simple. So let's keep it simple. The way I used it today is I used it from the open of New York Stock Exchange, and I extended this out, and I took my trade right here, and I marked my stop, my entry, and my TP. Now, obviously, could have made a lot more, but that's always hindsight, and that's always going to happen. Just stick to what you know, stick to your data. Anyway, the way I use this volume profile, first of all, the volume profile is representing volume by price. So typically, you're going to see these candlesticks down here, or I guess bars. These are volume bars. This is volume by time, which is useful. But to me, it's really a no-brainer to have some kind of volume profile because you might as well also have the volume by price. It's just another important factor you should always be using on your chart because now you can see what levels of price buyers and sellers are specifically interested at or not interested at. So within the volume profile, briefly, you're going to have the value area, which is for this fixed range I'm seeing from where I marked it 830 to up until before I traded. They do have visible range profiles, but for my trade, we're using a fixed range. Anyway, this is 70%, this yellow area. This is 70% of trading activity right here. This is the value area. And then on the edges, where it shifts to gray for my specific layout, you have the value area high, and then you're going to have value area low. These are often ledges where you are now trading outside of the value area, hence why they're value area high, value area low. And then you're going to have structures within your volume profile. You're going to have, sorry, let me clear all this off. High volume nodes, which is typically area where the market spent a lot of time transacting in and a bulk of the volume is at. For example, those two areas. And then you're going to have low volume nodes, which, as you can see on the chart, may often and do often correspond with fair value gaps. Now, me personally, I put more emphasis on low volume nodes and specifically not just any low volume node, but I like to see it correspond with either a value area low, value area high, or a ledge more specifically. So what I mean by ledge is I want to see an area of high volume, almost like that, or an area like this. We have high volume here. And I want to see a drop off. All right, so I'm going to delete this. So this area here is the drop off. That is a ledge for me because sometimes you'll see low volume nodes and the market will just be trending all the way up. It's just shooting up. And those are good, but they're too broad and they're not surrounded by corresponding like buildup of volume. I like to see corresponding buildup of volume to form that ledge, preferably. So in this case, the way I used the volume profile, oh, sorry, I forgot one more. You have the point of control, which is this red line. This is the single highest amount of volume via a price point, a specific price point. So this whole area, this price point here had the most transactions, the most volume. Anyway, the way I used volume profile in correspondence with a fair value gap. And like I said, I do put more emphasis on ledges of the volume profile than gaps. However, I will say gaps can be useful to indicate strong buying or selling pressure. The only problem I have with gaps is they're time frame dependent. You can, if you really search hard enough, you can find a gap at almost any price if you just found a different time frame to mark it up. And some of these gaps, do you mark up the really small ones? Do you mark up the huge ones? There's a lot to them, and I think there's a little bit of randomness. But if you pair it with a low volume node, it has a lot more applicability, and that's what I did. So I saw that we had a strong move to the downside, which did leave conveniently a fair value gap. Now, like I said, don't put a lot of emphasis on this, but I did mark it up. And it also fell in line with this area, this ledge of volume. And the main reason I liked it is one, obviously, this is a strong selling move. The volume is abnormal, it's strong, and we made a significant push down after this movement. And as you can see, I mean, we pushed through the value area all the way down, rejected higher, blah, 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 blah. So that's one example. The other example is we did build up volume prior to this, shot down, created a gap and a low volume node. So it became a area of interest at this point. Did I know I was for sure going to take a trade here? No. I just knew I was going to specifically observe the market and really start watching my order flow at this point here to see if I wanted to trade. And what was nice about this trade is my risk was defined. Would I have liked it to be more defined? Yeah, but it was there. I simply put it towards this ledge. Usually what I like to do is I'll put it above that selling pressure, but that stop was way too high, or I'll find an area on Bookmap where the overflow, there wasn't anything specific. But we had a low volume node from a ledge. We had a fair value gap, and the fair value gap and ledge were both aligned with a strong selling movement with abnormally high volume, which is good to see. And obviously, it did pay out well for the sellers the first time around. So I watched the market here, and I saw there really wasn't a lot on Bookmap. All that you really saw was there was strong buying pressure that almost immediately got rejected. There really wasn't any absorption, and if there was, it was very, very fast. You simply saw strong buyers get in, and then strong sellers respond right back. So that's when I took my trade. And fortunately, considering how fast this moved, I had a decent entry. Now, it still was quite a few points for the stop. My stop was right here around the 80s. My entry right here around 6425, as you can see. And I put it right at the point of control for this volume profile, which is usually a safe bet because the point of control and even high volume nodes in general can act as areas of basically stickiness. They'll consolidate, they can reject, they'll bounce up and down all the time. So I put my TP there. Now, if it breaks a high volume node or point of control, it's probably going to flush, which is what this did. It tested it, came back up, and just dumped pretty hard up until you conveniently, and that may have been a decent setup, got to the next gap right here with conveniently strong buying pressure. Also at a value area low and somewhat of a low volume node right here. Now, did it break it a little bit? Yes. But once again, are you for sure taking a trade in these areas? Absolutely not. You are simply watching. So if you would have been watching, and if you have memory built up in the market, probably could have had a setup based on what you saw and how quick it was. So now it didn't rip up like this one, rip down, but that's still 50 points, 40, 50 points. So anyway, that is how I used volume profile and fair value gaps to take a profitable trade. And you can keep it pretty simple. With this trade, I really didn't use too much order flow because there wasn't anything significant on there. And as far as the higher time frame, didn't use anything there either. We were outside of the previous day volume profile. We were outside of all the ranges. We did not sweep any overnight highs or lows. The only higher time frame confluence that there was, literally the only one I saw, in my opinion, was it did fall in another fair value gap range right here, which is a bonus. Definitely, I took that into consideration and was aware of it. So other than that higher time frame confluence, that was it. I simply looked at the trade, marked up my areas, used fair value gaps and volume profile and took a trade there. And this is the same thing I've been doing for the past, I would say, over 6 months, 7 months. That's made me profitable. So hopefully this year I'm looking to another very profitable year, as the tail end of last year started being decent until I blew my 5 top 10 accounts. Don't worry, we have more funded accounts. We're working back at it. But yeah, I would definitely look into the strategy. It's very easy. I like it. Volume profile, I think, for any trader, whether you're ICT, supply demand, whether you trade for value gaps like this, I think it's useful to basically add more confirmation to your zones. Really confirm, is this an area of interest? Is there liquidity here? Is there a lack of liquidity, etc.? So hopefully you guys enjoyed it. Hopefully that was a good example. I'm going to keep trying to make more videos, maybe make more trade reviews like this too. And until next time.